Imagine if someone, about 300 years ago, without computers, without indicators, without news, could make a fortune in the market just by reading people's minds. Today, most traders look at charts, yet the market still crushes them every day. What? Because they make the same mistake over and over. They don't understand the market, nor do they understand themselves. Selling out of fear, buying out of greed, and hoping for a recovery when they're in the red. This is the psychology that drives 90% of traders out of the market. But the question is the market really random, or is there a human mind working behind every move? If you listen carefully to the book we're about to explain, it could change your entire perspective on trading. This book is based on Honma Muneshisa, a man the world today knows as the god of trading. This is the man who invented the candlestick chart, which is on every trader's screen today. The author of this book is Lee Hang-do, who brought out Honma's hidden thoughts, his psychology, and the rules that apply to the market today with as much precision as they did hundreds of years ago. From this book, we've extracted 10 incredibly powerful trading rules, and I can confidently say that after hearing them, you'll find yourself thinking, I wish I had known these things sooner. So listen to the audio carefully, because this isn't just a book, it's a story that can change a trader's mindset. So let's get to Honma's rules. Honma Muneshisa's first rule doesn't say to watch the market, or understand the chart, or keep control over yourself. Honma's first rule is far more dangerous than that. Honma Muneshisa's first rule says the market always looks right at the wrong time. Listen to that line again. The market always looks right at the wrong time. This is where most people get trapped, and this is where Honma made his money. When the market is going up, every candle is green, the news is positive. People tell stories of profits. Then the mind says it's a sure thing, it's only going to go up, and at that very moment, the market reverses. Honma would say, this is no coincidence. It's a trap of the human mind. The market starts to look right to you when it's about to hurt you the most. Think about it. If the market were really that easy, why wouldn't everyone be making money when it looks right to everyone? Honma realized that the market's job isn't to deceive you. Its job is to hold up a mirror to your thinking. Just when you start to feel there's no risk, that's when the real risk begins. And just when you think it's all over, that's when a new game starts. Honma called this psychology the crowd comfort trap. Although he never used that term, his entire trading strategy was built on it. When the crowd feels comfortable, the market becomes dangerous, and when the crowd is in fear, the market becomes an opportunity. But there's a twist here. Honma didn't say to trade against the crowd. No, you'll find that advice in every YouTube video today. Honma said, be with the crowd, but don't think like the crowd. That's the difference between a trader and Honma. The crowd makes decisions by looking at the market. Honma made decisions by looking at people. He would ask, what are people feeling right now? Excitement, fear, or greed? For Honma, a candle wasn't just the price. It was a record of human emotion. A long green candle, the thought, it's too late now. A long red candle, the thought, it's all over now. And this is the very thought Honma was looking for. Because where the thinking goes to extremes, the market turns from there. Most traders don't lose in the wrong place. They lose in the right place with the wrong mindset. When the market looks perfectly clear, that's when Honma would be most cautious. He would say that if the path looks too straightforward, understand that a trap has been laid. And even today, 90% of traders fail to see this trap. They think this time is different. But the market runs on the same psychology every time. Honma's first rule teaches you that the danger in the market isn't when everyone is scared. The danger is when everyone is complacent. If you feel that it's now easy to trade, Honma says to stop. And if you feel that you no longer understand anything, that's when you should pay attention. Because the market rewards you when you can still think even in confusion. Honma's greatest strength wasn't the chart, it was his sense of timing. He would wait for the moment when the market had convinced everyone, and as soon as confidence reached its peak, Honma would know that something was about to change. This rule doesn't teach you how to take a trade. It gives you the power to pass on one. And a trader who masters the art of not trading is summoned by the market itself. Honma Muneshisa's second rule is not about the direction of the market, nor is it about the trend. This rule is about something that most traders never see. Honma Muneshisa's second rule says the market doesn't change when the news comes. The market changes when the effect is over. Feel this line because even today, most people make this biggest mistake. News comes out, the market jumps. News comes out, the market falls, and the trader thinks that's the reason. But Honma would laugh. He would say that if the news was everything, the richest people would be the ones who read it. But the real money was always made by those who thought ahead of the news. Honma understood long ago that what affects the market is not the news, but people's expectations. The news is just an excuse. The real game has already begun much earlier. When positive news comes up and the market goes up, most people think it will go even higher, but that's not what Honma was looking at. He was looking at the glint in people's eyes. He watched the confidence in people's voices. He watched the pride in social discussions, and as soon as expectations peaked, Honma would know the effect was ending. The market doesn't turn on the news. The market turns when expectations end. This is the very spot where most traders get trapped every time. They enter after the news and get trapped when the effect wears off. Honma turned this psychology completely upside down. He would ask, is this news shocking people, or is it just confirming their expectations? If the news supported the pre-existing expectation, Honma would know the market had less strength to move further. And if the news confused, scared, or shattered people's confidence, that was precisely the moment Honma would slowly build his position. Honma used to say the market turns not on noise but on silence when everyone is shouting about the news. The market has already made its big move, and only when the news begins to take effect does the real shift start. Honma Muneshisa's third rule teaches you neither trends nor entries nor exits. This rule goes straight at your mindset. Honma Muneshisa's third rule says the market doesn't make you lose because you're wrong. The market hurts you because you want to be proven right. Most traders don't like hearing this line because it puts them, not the market, on trial. Most people think trading losses come from bad analysis. Honma said losses mostly occur after correct analysis. What? Because as soon as you think you might be right, you stop listening. The market says something else, but your mind only hears what confirms it's right. Honma called this ego lock, where the mind isn't fighting the market but itself. When a trade goes against you, you ignore the stop loss. You look at hope, and hope is the market's favorite weakness. Honma understood long ago that the market punishes ego, not ignorance. A trader who says, I don't know, can learn, but the one who says, I know, gets trapped. Honma never considered himself an expert. He said that the day he felt he had mastered the market would wipe him out. That was why Honma made the most money when he was the most flexible. Most traders don't lose money in the market. They sacrifice money to defend their view. Honma used to say the most expensive thing in the market is your ego. As soon as you become emotionally attached to a level, a pattern, or a view, you become blind, and the market doesn't make way for the blind. Honma never married any idea. For him, every trade was just a probability, not a truth. If the market rejected that probability, Honma would step back without arguing. No anger, no revenge trades, no trying to prove anything. Because he knew you can never win an argument with the market. This is where 90% of traders break down. They don't lose to the market, they lose to themselves. They want to be right, not rich. Honma always chose to be rich. Honma Muneshisa's fourth rule isn't about taking a trade. It's about not taking one. Honma's fourth rule of Muneshisa says the market's most honest form is when it is doing nothing. Most people get confused by this line because today's trader believes the market is 100% correct. It only makes sense when it is moving up or down. But Honma would read the market when it paused, where candles were forming but unable to make a decision, where price was hesitating but no direction was forming. Honma would say this is where most people make their biggest mistake because the human mind cannot tolerate emptiness. When the market is doing nothing, a trader wants to do something, and this restlessness is the market's greatest strength. Honma understood long ago that the market hurts people not from the moves, but from the waiting. When nothing is happening is when people overtrade, when people break the rules, when people take trades that make no sense. Honma considered this phase the market's breath. He would say that just as a person takes a breath before speaking, the market falls silent before making a big move. But most traders mistake the silence for boredom. They think the market is useless. Nothing will happen today. Let's just take a small trade, and that's when the market catches them. Honma would say that the trader who can remain calm even in silence, the market opens itself up to him. This rule teaches you that the market doesn't present an opportunity every day, and not every opportunity is for you. Honma would watch for days on end. No trades, no action, just observation. Because he knew the market doesn't rush. Only humans rush, and the market takes money from those who rush. Honma Muneshisa's fifth rule is not about the market's moves. This rule is about the market's first lie. Honma Muneshisa's fifth rule states that the market's first move is often not the real one. It is just to see who is trusting. This line is not easy to understand because most traders assume the market is honest. But Honma knew the market isn't honest. It's a tester. When the market moves for the first time after a long silence, the crowd thinks it's the breakout, and that very thought traps them. Honma used to say the market first looks at people's expectations and then gives the direction. The first move is not the market's decision. It is a way to measure people's reactions. How many people jumped in? How many got scared? How many gave up quickly? For Honma, the first move was a question and the second move was the answer to that question. But most traders put their money in the question itself. You've probably seen a long range. The market suddenly moves up. People get excited. Breakout, trend begins, and then the market pulls back. Honma would say, this isn't a failure. It's the plan. The market first buys your confidence, then your position. A trader who believes in the first move is telling the market, I'm ready to lose. Honma never followed the first move. He watched it calmly. Honma's trust was in the second move because the second move is not for the crowd. The second move is for those who can wait. Honma Muneshisa's sixth rule is not about fast moves. It is about power that builds slowly. Honma Muneshisa's sixth rule says that when the market moves fast, everyone sees it. But when the market moves slowly, only those who know how to wait can see it. Today's trader has become addicted to speed. They want a big candle, a sharp breakout, and instant profits. But Honma was never impressed by such moves. He knew that sharp moves are often for show, not for profit. The real money is hidden in the market's moves where everything looks very ordinary. Honma said the market first gathers strength, then it shows it. Slow moves don't attract a crowd. No noise, no excitement, no fear, and where there are no emotions, professionals operate. Honma Muneshisa's seventh rule is about the fear of being late to the market. It states that the most dangerous emotion in the market is not fear. The most dangerous emotion is the thought, the opportunity has passed. This single thought has forced millions of traders to make the wrong decisions, even when they were in the right direction. Honma used to say, the market never opens the same door twice. It offers opportunities again and again, but each time in a different form. A trader who loses heart after the first move can't even see the second chance. Honma never took an entry after a sharp move. He would wait for the moment when the market takes a breath after a sharp move because every big move leaves a vacuum behind it, and that very vacuum is the second chance. Honma Muneshisa's eighth rule is not about the market's difficulties. This rule is about the market's ease. Honma Muneshisa's eighth rule says that when the market starts to feel too, that's when you are most vulnerable. Most people ignore this line as soon as they hear it because the human mind mistakes ease for a reward. If a trade is going smoothly, if you see a profit the moment you enter, if every level is working, the mind says, I got this now. Honma would say this is where the downfall begins. The market never teaches you a big lesson by hitting you with a loss right away. It first makes you comfortable. It gives you confidence. It makes you feel like you're in control. And just as you let your guard down, the market shows you a mirror. Honma Muneshisa's ninth rule is not about the market's fear or greed. This rule is about the state of the market where there is neither fear nor greed. Honma Muneshisa's ninth rule says the market is at its truest when it doesn't generate any emotion. This line is the most difficult to understand because most traders look for emotion in the market. When fear appears, they think it will fall. When greed is visible, they think it will go up. But Honma read the market that wasn't making him feel anything. A market where there is no excitement, no nervousness, no haste, no regret, just a clean move. Honma would say that when the market doesn't make you feel anything, it is telling you everything. Honma Muneshisa's 10th rule isn't about beating the market. It's about living with the market. Honma Muneshisa's final rule says the biggest loss in the market isn't losing money. The greatest loss is losing the trader within you. It takes most people years to understand this line because at the start every trader chases money, bigger profits, faster returns, getting rich quick. But Honma said that anyone who trades solely for money will end up losing it to the market. Honma observed that most traders break down for the same reason, not from a lack of strategy or knowledge, but from mental exhaustion. Constant losses, constant hope, constant self-fighting. A time comes when a person doesn't stop taking trades, they stop thinking. And that is the market's greatest prey. Honma used to say that if trading is draining you from the inside, then you haven't lost. You're wrong. Every day, Honma would ask himself the same thing. Am I still calm today? Am I still not taking the trade personally? Am I still not seeing the market as an enemy? Because the day the market becomes your enemy, you have already lost. Honma would take a break from himself, not the market, after every big loss. He believed trading is not a race. It's a long journey, and the person who burns out halfway can't see the destination. This rule is the last mirror it holds up to you. The question isn't how much you've made. The question is, are you the same person you were when you started trading? Do you still have curiosity? Is there still a hunger to learn? Is there still peace? If yes, then you are winning. Even if today is a red day, and if not, then even if your account is green, you are losing. This is why Honma Muneshisa wasn't just rich. He was free. The market wasn't his life. The market was his art. And this is the true meaning of this entire audiobook. These 10 rules may or may not make you rich, but if you truly understand them, you will never become a slave to the market, and that is the true legacy of the god of trading.